All right, let's just get right into it. You know, pretty much everyone who gets into the stock market has this big dream, right? Trading for a living. I mean, the freedom, the challenge, the potential. It's this amazing vision. But for most people, there's this one giant, massive wall that just stands right in their way.
I mean, of course you do. Who wouldn't want that? The idea that you could master a skill that lets you make money from literally anywhere on the planet, that's so appealing. But how do you actually start? Especially when, right from day one, you're staring at this huge financial hurdle.
And that right there is the real question, isn't it? Especially for so many of us here in India. You see all the ads, you hear the success stories, but then you actually start looking into it, and bam, you realize the kind of money you need to trade safely. It just feels impossible to save up. So, what are you supposed to do?
Okay, so before we get to the solution, we've got to understand the problem. And that means we need a super quick look at how the whole stock market thing even works. It's actually a really simple, kind of brilliant idea when you break it down.
So let's say you've got a company. We'll call it ARK. It's doing great, but you want to take it to the next level. And for that, you need a big chunk of cash. Let's say 1.5 crore rupees. What do? Well, you can go public. You have an IPO, and you basically offer up tiny little pieces of your company, we call them shares, to anyone out there who wants to invest.
And here's the really cool part, the key takeaway. When you buy one of those shares, you're not just clicking a button and buying a number on a screen. No, you are literally buying a tiny slice of that company. You become a part owner. So if ARK does amazing and grows, the value of your little slice, your share, goes up right along with it. That's the dream, right? That's the core of it all.
But this is where that beautiful dream often just smacks right into a very real, very high brick wall. Because to actually trade the Indian market every single day, and I mean do it properly with a real strategy that protects your money, you need capital. And I mean a lot of capital.
2 lakh rupees. Yep. That's the realistic minimum you need to have a fighting chance trading the Indian markets with any sort of proper risk management. And I know what you're thinking. Wait. I've heard you can start with way less. I know, but let me break down for you exactly why trying to do that is so dangerous.
So this is the big question, right? The one that traps so many beginners. It feels totally logical, doesn't it? I'll just start small with 10 grand, learn the ropes. But the cold, hard math of trading, it just doesn't work like that. The amount of pressure it puts on you is it's insane.
And here is that trap in black and white. Look at this. If you have a 10,000 rupee account and you want to make a meaningful 5,000 rupees from it, you need to make a 50% gain in 1 month. That's basically gambling. It forces you to take these wild, crazy risks. But now look at the pro with 2 lakhs. To make double that amount, 10,000 rupees, they only need a tiny 5% gain. See the difference? They can manage their risk, they can trade smart, and they can do it month after month.
And this really gets to the psychological heart of the problem. Think about this. The absolute best traders on the planet, they are ecstatic if they can make 5 to 6% in a month. But what's 5% of 10,000 rupees? It's $500. You can't live on that. So what do? You start gambling. You take on way too much risk hoping for that one miracle trade, and, well, we all know how that story usually ends.
So if using your own small savings is a recipe for disaster, and saving up 2 lakhs just isn't realistic, is the dream over? Is that it? Absolutely not. You just have to change the way you're playing the game. It's time to stop thinking about your money and start thinking about trading with someone else's.
And this is the solution. It's called a funded trading account. There are these specialized companies out there called prop firms, and here's what they do. They give you their money to trade with. They take on all the financial risk. Your only job? Prove you've got the skill. Prove you can trade smart and manage risk. If you can do that, you get to split the profits with them.
And the process is actually pretty straightforward. First, you have to pass a challenge. Think of it like a trading exam to prove you know what you're doing. Once you pass that, boom, you get a live account funded with the firm's real money. From there, you just trade that account, and you get to keep a massive chunk of the profits. We're talking 80, sometimes even 90% of everything you make. And listen, we're not talking about small potatoes here. The typical starting account size for trading U.S. index futures with these firms is often $50,000. Just let that sink in for a second. You can go from stressing over a tiny personal account to controlling a $50,000 trading account. The whole capital problem, it just disappears.
All right, so funded accounts are the key. That's clear. But which market is the best one to use for this kind of model? Well, for traders based in India, the answer is incredibly clear. It's the US market. And the reasons why? Oh, they go way beyond just the money.
I mean, this table right here, it says everything you need to know. The Indian market, it's open right smack in the middle of your work or college day. But the main US market session, that happens in the evening for us here in India. This is an absolute game changer. You don't have to choose between your job and trading. You don't have to skip classes. You can learn and practice the skill after all your other responsibilities are handled.
And that really is the beauty of this whole thing. You're not glued to a screen for 8 hours a day, not at all. Instead, you can focus all your energy on a specific, really active part of the day for just a couple of hours in the evening. That makes this something you can actually stick with for the long haul.
Okay, so what exactly are we trading in the US market then? Well, we're not trying to pick individual stocks like should I buy Apple today or is Tesla going up? Nope, we're trading the entire market as a whole using things called indices. And these are the big three you need to know. You've got the NASDAQ or NQ, which is basically the top 100 tech companies. Then there's the S&P 500 or ES, which tracks the 500 biggest companies in the US. And finally, the Dow Jones or YM, which is the 30 huge industry leaders. Now, because these are collections of the biggest companies in the world, they have tons and tons of trading volume, and they tend to move in more predictable ways. And that, for a trader, is exactly what you want.
And just so you know, this isn't like some sketchy, Wild West kind of marketplace. All of this trading happens on the Chicago Mercantile Exchange, the CME. It's one of the biggest, most regulated, and most established exchanges in the entire world. That gives you a level of safety and structure that's absolutely crucial if you want to trade like a pro.
Okay, let's pull all of this together now. If you don't actually need your own big pile of cash to get a large trading account, well then the entire challenge of becoming a trader, it completely changes.
This really does change everything. Your main goal isn't saving up 2 lakhs anymore. Your goal now is to develop your skill, your trading psychology. The barrier to entry isn't your bank balance, it's your dedication. It's your commitment to actually learning this craft, building a solid strategy, mastering your risk, and getting the mental toughness to execute your plan perfectly.
And let me be 100% clear on this. This is not a get-rich-quick scheme. It's not a shortcut. This is a professional skill, just like becoming a doctor or an engineer. Yeah, you can learn the basic concepts in a couple of months, sure. But mastering it, mastering the psychology, the execution, that takes years of hard work and practice.
So I want to leave you with this one final thought. For decades, we've all heard the same thing in the trading world. You need money to make money. Well, that game has changed. Today, what you know, your discipline, your actual skill, that is so much more valuable than whatever is in your bank account. So the real question you have to ask yourself isn't, how much money do I have? It's, how badly do I want to learn?